Let me ask you something honest. How many strategies have you tested? How many indicators have you added? How many YouTube videos, Twitter threads, and Discord signals have you followed, and you're still not consistently profitable? Here's what nobody wants to tell you. Your strategy's probably fine. The problem is you. And I don't mean that to be harsh. I mean that because it's the most important thing I could say to you right now. Every single day, people scroll through crypto feeds and see screenshots of 10x trades, overnight flips, and easy money. And every single day, those same people blow their accounts trying to copy what they saw. What those screenshots never show you is the mindset behind consistent profitability. And that's exactly what we're breaking down today. 6 mental shifts. That's it. Master these, and the way you trade will never be the same. Let's get into it. From excitement to managing risk. The first shift, and honestly the most important one, is moving from chasing excitement to managing risk. Amateurs walk into a trade thinking, how much can I make? Professionals think, how much can I lose if I'm wrong? That one question, flipped, separates the two completely. Before you enter anything, you define your stop. You calculate your position size. You know exactly what you're risking. Not because you're scared of the market, but because protecting your capital is the strategy. In crypto, volatility is opportunity, but only for those who respect it. Shift number 2. Stop trying to be right. Start playing the odds. Retail traders are obsessed with being correct. They need the trade to win to feel good about themselves. Professionals, they're obsessed with expectancy. Here's a stat that breaks people's brains. A trader with a 60% win rate and a solid risk-to-reward ratio will consistently outperform someone with a 90% win rate and poor risk control every time. Losses aren't failures. They're the cost of doing business. Your edge doesn't show up in one trade. It reveals itself across 50, 100 trades over time. Trading is a statistical game, not a prediction competition. This one right here, this is where most traders are silently bleeding money. Random entries create random results. If you're entering trades based on gut feelings, half-read patterns, or because someone tweeted, "This is about to pump," you don't have a strategy. You have a gambling habit dressed up in trading clothes. Professional traders operate from structured systems every single time. Defined entry criteria, clear invalidation level, pre-planned take profit or management approach, journal review after every execution. No checklist, no trade. It's that simple. Discipline compounds faster than luck ever will. Okay, raise your hand if you've ever chased a candle that already moved 20% and got absolutely wrecked. Yeah, we've all been there. Here's the truth about FOMO. It's not just an emotion, it's a capital killer. When you chase a move that's already happened, you enter at a disadvantage. High risk, low reward, emotionally compromised. The market runs 24 hours a day, 7 days a week, but your edge does not. The best traders I know are masters of one skill above all others: waiting. Not trading is a position. Missing a move is survivable. Forcing a bad trade is expensive. Professionals wait for alignment. Amateurs chase movement. This shift right here, this is the one that separates good traders from great ones. You cannot control whether a trade wins or loses. The market doesn't owe you a profit because your analysis was solid. What you can control is everything that leads to the result. Your risk per trade, your emotional stability during the position, your strategy adherence, your review process after the fact. Here's something that'll mess with your head. Winning a trade with bad execution is actually dangerous because you just rewarded sloppy habits. But losing a trade with perfect execution, that is growth, because you did everything right and you know it. A professional judges success by how they traded, not whether they won. Last shift, and honestly, this one's the game changer for your account balance. The traders who are still around after 5 years, they're not the ones who hit the biggest single trade. They're the ones who never blew up their accounts. Crypto rewards patience far more than it rewards aggression. A consistent 2 to 5% monthly return, compounded faithfully, that builds life-changing equity. A 40% gain followed by a 50% loss, that sets you back further than you started. Avoiding large drawdowns matters more than chasing large gains. Professionals think in quarters and years. Amateurs think in hours and days. Which one are you going to be? So let me bring it all together. Becoming a professional trader is not about finding a secret indicator. It's not about the right signal group, the best Discord server, or some hidden moving average combination. It's about becoming a fundamentally different kind of thinker. Emotion to structure, impulse to discipline, ego to data, excitement to consistency. When your mindset changes, your results follow. That's not a motivational quote. That's the actual mechanism behind every consistently profitable trader you've ever admired. The market doesn't pay you for effort. It doesn't reward the hours you spent staring at charts. It pays you for controlled execution under uncertainty. Start thinking like a risk manager protecting a business, not a gambler hunting a jackpot. That shift, right there, that's where everything changes. Now, I want to hear from you. Drop a comment below and tell me, what's your biggest psychological challenge when you're trading? I read every single one. If this gave you even one thing to think about, share it with a trader who needs this. And if you haven't subscribed yet, hit that button. I'll see you in the next one.